particular. We saw the share price hitting a record high. What was the real standout in the results as far as you saw it?
It came in above expectations, and I think it really highlighted that the banks are in a bit of a sweet spot at the moment. We're seeing moderate credit growth, funding pressures are easing, they are concentrating on cost reduction, bad debts are also less of a concern. So all of this is coming together, and of course that search for yield. We've seen the banks continually provide a very attractive dividend yield and a rising dividend yield in this type of market. So ANZ coming in above expectations by a touch, a cash profit of $3.18 billion. That beat consensus, which was at $3.12 billion. But I think it was really that dividend yield which helped boost the share price performance today. We saw Commonwealth Bank back in February raising its interim dividend by 20% from, I think it was $1.37 to $1.64, so $1.64. And then today we saw ANZ coming out to boost its interim dividend by 11%, so from 66 cents to 73 cents. And I think it's a bit of a conundrum at the moment, because on one hand the bank valuations are looking stretched, but on the other hand this chase for yield means that on a yield basis the banking space, the telecom space is still looking very attractive. And if I can just bring up a couple of charts very quickly. If we have a look at the banking sector and just have a look at performance, this is the last 5 years in terms of the banking sector. We have a look at dividend yields. Now this is the dividend yield over the last 10 years, and you can see that yields have been falling because prices have been rising and earnings haven't been going up as strongly as the stock prices have. And then if we have a look at valuations, this is the PE ratio. You can see that the PE ratio has been rising, and you can see it's at the upper end of where we've seen our bank valuations historically. So a bit of a conundrum, but the fact that we've seen this dividend yield increase for ANZ means that it was great news for the banks today. In fact, you could probably call it Bank Day. ANZ, Westpac, CBA, all with an all-time record high, and we saw the other banks hitting 52-week highs today.
On Julia, because it wasn't just the banks where the money was flowing to today, it was Telstra as well. Telstra hitting the big 5-0. What does this mean?
The $5 mark for Telstra. This is a key technical level, and once again it's this yield theme that's come into play. I've gone back and run the numbers over the last 2 years to see where the best performing sectors have been on the Australian share market, and it's not surprising to see it's either being the high yielding sectors or the defensive sectors, and investors have really taken to this defensive theme throughout the last couple of years. So in the last 2 years the best performing sector has been the telecom space, followed by healthcare, the consumer staples, the utilities, and then the property space. So you can see that this theme is quite prevalent, and the telecom space has done very well. Telstra in this space has done extremely well, up by 1% today, up by 11%, actually up by 14% in 2013 so far. But it's actually not just Telstra. We've seen the smaller telecom companies doing much better than this. In fact, if we have a look at iiNet, TPG, M2 Communications, which are also in that telecom space, they've gained more than 35% in 2013 so far. And in fact, over the last 2 years, while we've seen Telstra shareholders very happy with a 71% capital return, we've seen iiNet as well as TPG gaining more than 110%. I think this is just a continuation of that yield defensive theme that investors have been seeking out over the last couple of years. So it hasn't just been the banks, it has been sectors like the telecom space. And remember, Telstra has a forecast dividend yield of about 9.5%, and if you consider that the market's average yield at the moment is 4.2%, you can see why these yield plays are so attractive. And then of course looking at the cash rate falling down here in Australia.
Yeah, so Michael, we get the yield play. Julia, it is the final day of the month, as Michael reminded us earlier. We're at sort of the highs of the year. Where do you see the market heading from here? I guess a lot is hinging on this manufacturing read coming out of China on Wednesday.
Well, the global growth picture is going to be very important, but what we've seen is that global growth picture, which has been quite weak this month, especially given the GDP numbers that we saw out of China and the US, the two largest economies in the world. But you know, it didn't seem to have much of a dent in terms of the performance of the Australian share market. For the month, we've actually seen a rise of 4.5%, and while we've seen a lot of pain in the materials and the commodity space, that's also translated into fantastic returns in terms of the high yielding areas of the market. The real winners in the month of April have been the telecom stocks. The telecom space has been up by 11%. That's followed by the banks with a gain of 9%, and property with a gain of 8.3%. 8%. If we have a look at the top performing stocks in the ASX 200, the top 5, or 4 of them were telecom stocks. IINet was up by 19%. We saw Telecom New Zealand up by 17%. TPG was up by 15%. And M2 Telecommunications up by 15%. So the only stock that wasn't a telecom stock in the top 5 was actually Breville, which managed to bounce of 15%. On the downside, though, you can probably guess that all of the 5 worst performers were all in that material space, so all in that mining space. We saw Silver Lake Resources, Sundance, Mirabel and Nickel all down more than 50% for the month. So a horrible performance in terms of those smaller miners on the market, but altogether pretty good. Now, May is typically quite a weak month for share markets. Over the last 3 years, we've actually seen the Australian share market losing ground in the month of May, as has the US stock market. So often we do see a bit of caution coming through. But if we keep on seeing this defensive theme playing out, then we could continue to see strength in the market, because generally it's the growth part of the market that lets the market down. But of course, at the moment, the strength is coming from the high yielding areas of the market, like the banks and the telecom sector.